Hi guys, welcome back to my channel. If you are new here, I'm an economist living in LA and I make videos on personal finance and how the economic principles affect our everyday life. Today we are diving into the concept of marginal versus effective taxation. Many people don't know the difference. If you ever heard about someone say, I don't want to earn more because I'll get taxed more, I want to explain in this video why it's a misconception and why earning more is still beneficial. So, first, let's understand the difference between the marginal taxation and effective taxation. In the US, it is a progressive tax system. That means the more you earn, you will be taxed at a higher rate, but not all your income is taxed at the highest rate. Only the income within each tax bracket is taxed at that tax bracket rate, not the entire income. So let me explain this with the 2024 tax rates. For a single filer, the tax brackets are 10% for 0 to 11,000 earning, 12% for 11,001 to 44,725, 22% for 44,726 to 95,375, 24% for $95,376 to $182,100, and 32% for $182,101 to $231,250, 35% for $231,251 to $578,125, and 37% over $578,125. For example, if someone earns $100,000, the first $11,600 will be taxed at 10%. So this gives us 1160. Then there is a 12% on income from 11,601 to $47,150. And this equals to $4,266. So to calculate the next marginal tax percentage, we will subtract 47,150 from 100,000 and multiply it to 22%, and this one will give us $11,627. So the total tax is 1160 plus 4266 plus 11,627, which is $17,053. And the effective tax rate here will be $17,053 divided by $100,000, and this gives us 17.05% as the effective tax rate. So the marginal tax rate is 22%, but the effective tax rate is 17.05%. So even though the highest rate applied to their income is 24%, their effective tax rate is calculated by dividing the total tax paid by their total income. So the effective tax rate is 17.05%, which means earning more money is always beneficial. So if they earn an additional $10,000, that would be taxed at the higher marginal rate, not their entire income. The tax rates differ if you're married and filing separately and if you're married and filing jointly. This table has the current tax rates, or you can go on the IRS website for the same. Some people think earning more means they lose money due to higher taxes. I will debunk this myth with an example. As I said above, in the US, the progressive tax system ensures that earning more money always results in higher net income, even if it pushes someone into a higher tax bracket. So let's see if the previous income is 100,000 and now it becomes 125,000. The marginal tax rate is 24% because the last portion of your income falls into the 24% bracket. And now let's calculate the effective tax rate. So first we will calculate the 10% on the first 11,600, and this is 1160. Then 12% on income from 11,601 to 47,150. So once you take the difference between the two and multiply to 12%, it gives you 4266. And then you calculate the 22% marginal tax on 100, 525 minus 47,150, and this one will give you 11,742.5. And lastly, you will take the difference between 125,000 minus 100,525 and multiply it to 24%, and this one will give you $5,874. So your total tax is equal to 1160 plus 4266 plus 11,742.50 plus 5,874, which equals to $23,042.50. And so the effective tax rate becomes $23,042.50 divided by $125,000, and this is equal to 18.43%. So as you can see that the marginal tax rate, which is the rate on your last dollar of income, is 24%, but your effective tax rate is significantly lower at 18.43%. So even though a higher proportion of income is taxed at higher rates, in the second example, the net income still increases significantly, which shows that earning more does not mean losing money due to higher tax. Okay, in the last part of the video, I will touch briefly on any changes that has happened since last year in terms of income tax brackets. The IRS can adjust the income limit based on inflation. Since the cost of living has been higher due to higher inflation, for 2024 tax year, where you will file taxes in 2025, the IRS has adjusted many income brackets. This adjustment allows some taxpayers to stay in lower tax brackets and helps those who received cost of living raises to avoid paying higher taxes. For example, married filers can earn up to 94,300 and can still remain in the 12% tax bracket as compared to 2023 $89,450 earning. This increase allows some couples to shield nearly an additional 5,000 from higher tax rates. So there you have it. Understanding marginal tax rates shows that earning more always benefits you. So don't let tax brackets deter you from aiming for higher income. If you found this explanation helpful, please make sure to give it a thumbs up and subscribe to my channel for more valuable information. My name is Parul. Thank you so much for watching, and I will see you in my next one. Take care. Bye.